Hi everyone. Sorry about that technical difficulty issues. Thank you for tuning in. Anyone new tuning in, I'm Mirna Herrera, and my co-host unfortunately isn't here tonight. He is not feeling too well, but it's Beston, and we are with Spill the Tea, Build the Block. But we do have a guest speaker today. I will go ahead and let her introduce herself.
Hi guys, my name is Mirna Herrera, and I'm with Paramount Credit Experts and also with Keller Williams.
Yes. So Mirna here is one of our guests tonight. We're both agents here at our downtown office. We've been I think licensed. How long have you been a real estate agent?
I think sometime.
I literally think it's both coming on like 8 years for us. And as we both started at another brokerage together, I got introduced to her by our managing broker there, and she was the one there to do credit repair and real estate agent all in one. So I've been working with her for like 8 years now. Yeah, from the beginning. And so what Mirna does is she's helped several of my clients. I think we've lost count at this point, but anybody that comes and doesn't have a qualifying score to purchase a home, which is 620 if you're using down payment assistance, we oftentimes run into the issues with credit. Credit is a big factor that comes into play. And what I love about Mirna and working with her is like we're not only trying to build credit for people to purchase, but also teaching them financial literacy and how to keep their credit good once they're done with the program.
Yes.
So like I always, people say cash is king. I think credit is king. If you don't have good credit, sometimes it doesn't matter how much money you make, but it's literally what your credit score is. And so I think we work well together in helping our people. So anybody that signs up with the program and follows her lead and has everything successfully done, they end up buying a home at the end. And so one thing that I offer with my clients for anybody that doesn't qualify off the bat and does need credit repair and signs up with Mirna, when it comes time to closing, I reimburse $500 back because they put into the work to fixing their credit. So I believe in giving back to them.
Yeah.
How long have you been? I think you've been a credit repair specialist a little bit longer, correct?
Yes. So I've been doing credit restoration for about 10 years now.
Okay.
Maybe 11, if I'm not mistaken.
11 years. And what made you get into wanting to start that career or help people with their credit?
I grew passionate about credit because I ruined my credit, I think, a couple of times. And then I had to rebuild it. And then I started doing debt consolidation.
Okay.
And that was like a big eye opener for me when I did a debt consolidation and I seen that I guess that other company was going to benefit more. And I just learned how to settle the debts on my own. I pulled my money from that company. I started settling on my own and I saved a lot more money than I would have going through that company.
Yeah.
And then I started to repair my credit. And from there, I was like, okay, well, I wanted to get into real estate. And then just being a single mom, I think it all like tied in together, just like not being able to make ends meet. And I was like, okay, I can't be at an 8 to 5. I can't afford things. So I started doing credit repair on the side and started working. And I was like, okay. So I started educating myself more on that topic.
Yeah. And congratulations. Your daughter just graduated, correct?
Mm-hmm, yes.
Yes. How does that feel? She's like your bestie.
Yeah.
I know you on a personal level. So you guys have kind of been there together.
Yeah.
Surviving life.
So yeah, it's bittersweet to say the least. I'm kind of like mourning my little baby, but at the same time, I have to prepare her for life and for when she leaves the nest.
Yeah. Are you having her graduation party?
Yes, next Saturday.
Oh, nice.
So I'll send you the invite.
Yeah. My son, he doesn't graduate until next year, but he does not want a graduation party.
Oh, why?
I don't know. He's just a little like, I don't want to say antisocial, but he's great with his friends, but he's just like, no, I don't want to party. And I'm like, we wait all this time for this accomplishment. And I think like one of the highlights is graduation is the party. And I think we do it more for us than they want it. So I told him like, I don't think you get a choice on this one. We're going to do it.
Yeah.
And I think we're going to do it with one of his best friends and do like a joint party.
That might work.
Yeah. But that's congratulations. Congratulations to the both of you guys, because I know it's super hard one for them. But like as a single mom, to just make sure your kids are thriving and surviving is good.
Yeah.
Okay. So we will jump into it. So I try to go through and be as intentional about this topic because I'm also super passionate. I've learned so much from you. And so I wanted to ask good questions where people that are watching could learn a thing or two, maybe even more about them being in the current situations that they're in. And hopefully they grab some nuggets from here and then they're able to apply it, hopefully connect with you if they have further questions about credit.
Absolutely.
Okay, so what are the factors that make up a credit score?
I would say it's 5. It would be debt length, debt history, debt utilization, mix of credit, and new credit. But the biggest 2 I would say is debt utilization, meaning the least amount of money that you use on a credit card is what's going to boost your score, and length of history. The longer you've had credit open is also going to play a big factor into your score each month.
Okay, so 5 things that affect your credit, or that the factors that come up with a credit score.
Mhm.
Okay, and I think the next question is what is considered a good, fair, poor credit score? But I guess let's start with fair. What is a fair score that you see average? What is that range?
I would say a fair score would be 620.
620. Okay.
A good credit, I would consider anything above 680.
Okay.
And then excellent score would be anything above 720.
720.
Yes.
Okay.
620, I believe that's where people just start getting their foot in and they start getting approved for stuff. But if we could get them to a solid 680 and above, they can save themselves about $200 to $300 just like on a mortgage payment.
Yeah. And we always try to get to that 620, teach them some background about credit so that when they get into the home, then they just continuously build it. And so that if they do resell, they qualify for more, the credit impact that it has later. Do you have anybody or know anybody in the 800s? How rare is it, or how?
Our age, very rare. Anybody above like 50, yes.
Okay.
Yeah. And it's because they have 20 years of history.
Credit history.
So when I hear people telling me like they're 19 and they have like an 820 score, I'm like, that's a little hard to believe.
Yeah.
But, it could be possible if they get added onto a credit card that's been open for like 20 years, their age. So
yeah. Okay. And then how much does payment history impact your score? I think this is a big one.
Yes. 35% of your score comes from payment history. So payment history is absolutely very important. It plays a huge factor into it, right? Because that's telling banks, loan officers that you are responsible and you're paying on time. So that plays a big role into your score and also into your credit report.
Yeah. So we always tell people to be on time no matter what, even if it is the minimum. Do you ever find like if somebody is struggling and they're coming to being that 30 days late, that's going to negatively affect your score? Late payments are probably the worst. Is there anything like, will credit card companies or will, car loans, will they work with you on saying like, I really don't want this to affect my score? Is there anything that we could work on or do or negotiate so I don't have that 30-day late?
Some companies have a grace period, but also what I found is that when people, before they even get that late payment, if they call ahead of time and they say, hey, I'm hitting this rough patch, can you help me? Most companies will help you and they won't report you late. But I feel like a lot of people get scared and instead of calling, they kind of just refrain from that and just let the late payment go. But yeah, I would say I would highly encourage people to call to set up something because most of the times they'll do like a payment arrangement where they can say, okay, we'll take the bare minimum for this month or do a deferment put it at the end of the loan. That way it doesn't count against you.
Yeah. Okay. Because I feel like obviously my husband Josh is a lender, and so we see when we're looking at the people's credits, we see that the lates are hugely affecting. Yeah. I was late one time on our car loan by accident. I thought I paid it and it dumped our credit, and then it stood on there forever. Josh was so mad at me.
How
and
many points did you lose?
I think it was like 25 or more, maybe. And it still affected us for like, they were like, well, you were late. And I was like, one time, like I pay my bills on time, but that one late payment still lingers and shows up there.
Yeah.
Can you help me delete that?
Yes.
Like, can you help me delete that late for us? Thank God that was years ago. But I've learned so much from them. And then, so I always get this. I find it interesting. A lot of people don't really monitor their credit. And I think it might be a little bit of a fear of like, they know it's bad or they think it's bad. And it's kind of like out of sight, out of mind.
Yeah.
How often do you think people should they run their credit or check their credit, or kind of any apps that you recommend a good monitoring for their credit?
I would recommend that people check their credit at least once a month. And the reason why I say that is because once the month is complete, you kind of get a broad like review of everything that happened that month. I've had clients that are like so invested into Credit Karma and they're like, I got an alert. Oh, my score increased, my score decreased. So one thing that's crazy is like if you have 5 different credit cards, each one of those credit cards have a different reporting date.
Okay.
So if you decreased one of your credit cards, let's say to 10%, your score is going to increase, let's say the 5th.
Okay.
Right. And then let's say your next credit card reports on the 10th, but you paid the bare minimum and that one's maxed out. Okay. Your score is probably going to take a dip at that moment.
Yeah.
Right. So people will see their score like a roller coaster, up and down, up and down. So people often freak out when they're on Credit Karma. Smart Credit is one of the systems or platforms that I use where people can monitor their credit, but I would say that platform. Now, those are vintage scores. They're not a FICO score, but it gives you an approximate of what your loan officer would be seeing.
Okay. And then, so I think we got that question. Okay. So we'll go into the next kind of questions. Fast credit improvement tips. So this is kind of a good one. If someone's score is at 580 today, what is the first 3 things they should do to try to improve their score the fastest way possible?
One, I would say make sure you're making your payments on time. Don't miss any payments. That's going to play a big factor. And the best one would be credit cards. Maintain your credit card between 3% and 10%. Less is best when it comes to a credit card.
Okay.
That's what's going to boost your score the quickest way.
So it's not even 30% anymore.
30% is the max that people can use. I stay away from telling people that because I feel like people start making exceptions, right? They start saying like, oh, okay, I could use 30. Well, next month I'll use 35. Next month I'll use 50%. What happens after 30% is that their score starts to take a dip. It starts to decrease.
Yeah.
And most people don't understand that. I had an interested call with the client yesterday. And he was like, hey, I have nothing negative on my report. Do I have late payments? What's going on? And he was like so stuck that he had late payments. And I was like, actually, you have nothing negative on your report. You don't even have inquiries. You have 5 credit cards, but all of them are maxed. And he was like, okay, but there has to be a late payment. I'm like, no,
they're just maxed out.
They're maxed out. That's what's dinging your score every single month. Yeah. And he's had most of his cards open for about 7 years, but all of them were maxed out. So he was like in the 500s.
Yeah. So I think one thing that I've learned over the years is that we don't talk enough about, I think in our Latino culture, we try to stay away from credit cards, banks, all those things. Yeah. I just remember my mom saying like, do not get credit cards, do not get student loans. So terrified to do that because I just didn't know the proper way to use the credit cards. And so when I was, I think 21, 22, and we applied for our first home loan, I was listening to my mom and I didn't do anything. So I had no credit though. So I had to build my credit from that. So I try to tell people now, if your credit limit is $500, $5,000, you never want to spend more than 30% of it. I think a lot of times it's like, oh, you get approved for 5,000. This is my money. And we go ham with it. Mm-hmm. You know, I've been there several times where I've maxed out my cards and not knowing how to properly use them. But the credit cards, you're supposed to use them correctly. Don't be afraid of them, but know how to properly use them. So you always want to stay under that 30%. And then what happens if you pay your payment before it's due, or do you recommend paying it a couple of days before the due date or on the due date? And do you pay the full balance if you can always?
So the way I simplify it for my clients is use $20 or $30 on it, right? And on your due date, pay it off. And that same day, you need to swipe it again for $20. Let that sit there for 30 days and just rinse and repeat. That's what you want to do. You never want to keep your credit card at a zero balance because you'll miss the opportunity for them to give you points, but you want to keep a bare minimum on there. But yeah, that's what I would recommend.
Yeah, just using it and paying it off. And then if you pay it off before or on the due date, you're not. Are you paying interest on it or no?
No, that's a good question. So yeah, if you're using $20 and you pay it off, you're not paying any interest. You're paying back the $20 you used. Yeah. But to answer your other question in regards to like if you make 2 payments that month, no, I often hear that from people on TikTok, and it's like it's not accurate information. Credit cards report, well, actually any creditor reports once a month. So what happens is you're making 2 payments that month, but the bureaus, they're not reporting to the bureaus every activity that they make, right? So if the reporting date is on the 1st and they've made the payment on the 25th, on the 1st, they're going to report whatever's reflecting on the 1st. If they make another payment, let's say the following day, that's not going to reflect until the following month. So.
Okay. So we want to pay on time and make sure our credit limits are all below that 30%. 10% is the ideal. Those are things that will improve your score. What about, we hear oftentimes an authorized user? How does that work?
Yeah, so authorized user is another form that you can boost your score the quickest way. Or let's say your client's ready to qualify, but they're probably short 5 points. The quickest way is to add them as an authorized user. There's 3 rules to that. Okay, 1, credit card has to be older than 3 years. I would recommend the older, the better. No late payments since the history of that credit card. Cannot have 1 late payment, even if that credit card is 10 years old and there was 1 late payment 10 years ago. And the credit card has to be under 30%. If none of those things combine, right, let's say one thing is off, I wouldn't even recommend you getting adding.
Mm-hmm. Okay. Yeah, because I've had a couple of clients say, I've been on my mom's card for a couple of years now, but then the card's maxed out and it's not improving their score.
Yeah.
So be careful on that. And when you're an authorized user, you don't have to use the credit card.
Correct.
But if you did use the credit card and you did pay it off from your bank account, does that credit history show a little stronger if the authorized user is actually using the card?
No, it makes no
difference. Okay, so next question. How important is credit card? So I guess we kind of talked about it a little bit. How important is credit card utilization? It's really important, right?
Really
and
important.
Do you recommend a Victoria's Secret credit card or like a Capital One credit card? What is the difference?
I love this question. And I love that you asked that because a lot of people often ask me like, oh, Express, Victoria's Secret. And I'm like, stay away from those. And this is many years ago. This is when I first started credit repair. I had clients that had Toys R Us and Gordman's.
Yeah.
What happened when those stores closed? Their score tanked because those credit cards closed. And my clients were calling me freaking out. They were like, hey, I lost 80 points, 100 points. What did you do? And I'm like, let's check. I looked and I'm like, wow, that credit card that closed caused them to decrease their score.
Yeah.
So because of that, I always tell my clients, stay away from retail. Stay away from retail credit cards. Get universal credit cards, bank cards, where you're not limited on using them. You could use them at Victoria's Secret. You could use them to pay a bill, buy groceries, an emergency. So
and then you get points from that.
Yes.
Is there any credit cards are your top favorites? Like Discover, Capital One, is American Express? Is there one that you say is like good with point system, but also helping build the credit?
I would say credit unions for sure. They have lowest interest rates. Then Discover and American Express.
Okay. So those are some credit options. Let me look at what the next question is. Should someone pay off debt or save for a down payment first?
Okay. So this is where we're going to come in. So when Salen sends us her clients, we like to analyze them along with her loan officer to see if we work together to strategize what accounts should be paid, to see if there's a faster route we could get clients into a home. So not only do we offer credit repair, right? But if I see that there's some accounts that are high risk where we see that they are going to get sued, that there's a possibility that the client's going to get sued, or that I see, hey, if you pay this, we could probably get you into a home in 90 days versus you sitting in the program, right? So we'll go over those options with the client to see which best is suitable for the client. But um, I will. I This is where I differentiate from credit repair companies. We analyze a credit report. If I see that there's accounts that the client needs to pay because more than likely they're going to get sued or they're going to pay them, get a judgment, a lien on them,
Yeah.
I automatically tell the client, hey, this is best for you to start saving.
Save.
We'll work on the rest of the accounts, but start saving so you can settle this.
Yeah. And I think oftentimes when we both face it, right, we get clients that are, hey, they raise their hand, they want to buy a home. What is the first step? I hear so many times, well, I'll go through the process of what it looks like. Okay, I'll be in contact in 3 months. I want to start paying this off, that off. I need to work on some of my debt, things like that. And this is why we are always like, do an application with the lender first so that we as the experts can really analyze the credit or see what is going to be better to pay off your credit cards or save. And so we're the ones that can guide you through making sure you're making the right decisions.
Yeah.
Because I think sometimes people don't know when you pay off a card or don't use your credit and pay them all off, that could actually negatively affect your credit. So that is exactly why we say, let's have an expert look at your credit and actually pull it. And then we can get you, yes, on the best path to home ownership. And that's what I tell people, because you may think you're doing the right things on the back end and call me in 3 months and we actually run the credit and you're still 3 or 6 months out, versus when we first talked, running that credit 3 months prior. We make sure you're already taking the proactive steps.
Yes.
And one thing too is like sometimes with our lender partner, Josh, he will have a system that can say, hey, if you do A, B, and C, this will jump your score this many points. And then sometimes there's not that option. Or we will ask important credit questions. And if I feel like, okay, I don't think this person's going to have qualifying score, I'll immediately connect them with you and have you do an analysis and saying, hey, they could benefit or they can't benefit. And that's what I love too, is you're super honest about it. Like you'll say they don't need credit repair, just do A, B, and C real quick and their credit score will be just well.
Yes.
Okay. So I think we kind of went over that. So we'll go into collections in debt. So this is another one I think we faced. Collections is a huge one. Charge-offs are huge ones. We're going to talk a little bit about the difference. Should collections always be paid off?
No, absolutely not. Paying a collection. So let me be careful on how I answer that. There's some accounts that you will have to pay. Okay. There's some companies out there that will tell you, like, yeah, we'll hire us, we'll delete anything and everything off your report. It's a walk in the park. But that's not true. Colorado has really tough laws. So we have to look at your report to see what accounts we recommend for you to pay. Now, paying it is not going to delete the collection from the report.
Okay.
But by advising the client, hey, go ahead and settle this, we are avoiding a potential lawsuit. So that some collections are necessary to pay to avoid a lawsuit. Will it get deleted from the report? No, we would have to delete it, but at least we now save that headache for the client.
Okay. And then what is the difference between a charge-off and a collection?
Okay. So a charge-off is when the creditor wrote off the debt, and a collection is when the charge-off sells it to a third-party collection agency. Sometimes it could be both. Sometimes you'll see a collection / charge-off where the creditor is retaining the account as a charge-off, but they also sold it to a third party. So I often see that on people's credit report where I'll see the same account twice on the report.
Okay. So that's the difference between the collections and the charge-offs. Before you do anything with them, contact us again. And then we often see this a lot. Student loan debt. How does that affect the overall credit? And then I'll have Josh kind of jump on in a second to see how does that affect the overall approval for a loan.
It affects, if it's negative, it affects the debt to income ratio. So it'll affect them to get qualified for more in the sense of a home. If they're already in collections, I've had clients that tell me, hey, can you delete student loans? And I often hear this on TikTokers that say, we can delete student loans. Yeah, can you? Yes, you can. But this is the reality is it's a federally funded loan. It's not going to go anywhere. If it removes, trust me, it's going to come back and bite you because they're going to get their money one way. They're going to offset you, garnish your wages, or when you retire, they're going to garnish that SSI. So don't avoid them. You need
student loans are, I think, the most, I don't want to say scariest, but they are the trickiest one that have a huge impact on a person's credit. And Josh, what is it? Because we get oftentimes where they pay as they earn, or they kind of go off of their income and they don't have a monthly payment, but they do have a bill. How does that come in the overall approval? Or what do you have to account for the student loans?
I think one of the bigger things is, and Mirna had mentioned it before too, is this is a big reason why you want to keep an eye on your credit on a monthly basis, because I can't tell you how many times I run into the situation where somebody thinks they know what their scores are and they're basing their plan off of what they think their scores are. And I end up running credit and it's like, oh, well, my student loans are 90 days past due. And they didn't even realize that they had a payment, much less that they were late, because they've been kind of dormant there on their credit report for so long that they just got used to it, to where I see a lot when they start reporting, then it negatively affects their score, shows as past due debt, which can in turn affect like underwriting situations like that. So when it comes down to the payment though, most of the time what we're looking at is the balances, and then we do like 0.5% of the balance because we do have to account for a payment against your debt to income ratio.
Okay.
And 0.5% of even 100,000 isn't going to make or break the file. The biggest thing that's going to make or break the file is the fact that they're 90 days late. So the if you have student loan debt, I wouldn't let that deter you. I would reach out to see what that impact is with us, but mainly just be mindful and watch to make sure that they're not late. That's the more important.
Yeah, because I think a lot in 2020 and like the deferred loans and all of that, people jumped on it, but then it also kind of messed people up too.
Yeah.
I seen that
up right now.
And then the next one was like, again, how do late payments impact a mortgage approval? That I think it really, really impacts it. And it's very hard to get past it. I think the most thing we see, would it be time, or what would be the best scenario for those late payments?
Depends, right? If they're recent, those are very hard to delete. If they're older, we can delete them, but they're very challenging. But I mean, it's doable. But yeah, that they put up a fight a lot to get those deleted. So
super, again, be on time, even if it's the minimum. If you're really struggling, call your creditors, your banks, your credit cards, and see if they're willing to work with you before it becomes a late. Okay, and this is a big one for me. I think I've attempted to use other credit repair companies. And I feel like nobody's had success with them. They pay a monthly fee and we're there for 6 months and nothing has happened. And that's like the tricky thing we've talked about, is like, there's no magic trick to credit or answers. You have we do estimates. Okay, it's going to take 3 months, 6 months, but we just never know how the credit's going to react. And so I think we've seen a lot of people have some crazy, I can't even remember the company name, but where they told them to be 90 days late on all of their accounts and then rebuild it. And we've had, I think, 3 people in the last 6 months go through this same company where they advised, stop paying everything. We need to have you 90 days late before we can help you. And they're even now in a worse off situation than they were to begin with. What are, I don't even know if we can say this, like what companies to stay away from, or what are some of the red flags? What makes you different from other credit repair companies?
Okay, so that's a good question. obviously I would stay away from any company that tells you to stop making payments, that tells you that you don't have to pay anything off your credit report. I think something to look at for a good credit repair company would be that they do an analysis and that they talk to you and go through it. And most importantly, honestly, they have to be upfront with you. There's some companies, because they're charging an upfront fee or a monthly fee, right? They promise you that they can delete anything and they want to get you enrolled for them to bonus. Where we differentiate is that we do the analysis. We don't send just superficial letters to the bureaus. We're actually looking at your report bureau by bureau. We're looking at the inaccuracies, derogatory items, and we're doing Metro 2 and Metro 2 disputes. We're removing personal information from your report, filing CFPB complaints. Now, these companies should be able to provide them and tell them, like, hey, this is what we do, and this is what we're going to be doing, and staying in contact with our clients. That I think that's very important. Now, the other thing is I would stay away from any company that guarantees you results. If they say 90 days, I would stay away from them, and I would ask them what method they're using or even proof of their letters, because we can't, as credit repair specialists, we cannot guarantee you a time frame, because there's so many factors there's so many things that can happen in that time frame. Late payments, inquiries, or a new collection pops up, and now your
Starting
word
again.
Yeah.
Okay.
So.
Yeah. So that's where I like working with Mirna, is that she's honest. She'll take a look at the credit, tell you what she thinks if you need it, and kind of go from there. And I think she's always willing to work with people on payment and how that works, but she kind of attacks everything at once versus one thing a month and trying to have you on the program longer than needed.
No, we try to get you out in and out of the program. Now, I'm not saying we're going to graduate you from the program in 6 months. I would say people, in order for them to see results, it takes a minimum of 6 months. You could be in the program up to 18 months. But, what we're doing is we're using FCRA laws from the beginning to get these deletions. Once we get these deleted, they're not coming back. So you have to be very careful with other credit repair specialists, especially if they're offering you and saying, hey, we can increase 120 points in a month. We're guaranteeing you fast results in 30 to 90 days. Anything that includes a promise, I would stay away from them.
Yeah, because I feel like we've had some people in the program for 2 years, and they stuck to it. We've had people in the program for 6 months. I would say I wish we would have done some numbers of how much money or how many accounts. I know with one of ours, you deleted like 22,000 in negative stuff.
Yeah.
We should have really.
And we did hers in 4 months.
Yeah, we did hers in 4 months. She came to us. We even did a video on her. She was very nervous because I was like, what I do with all of our clients is like do a group chat, group email. So it's a soft handoff. And then I always check in. I try to like once a month, hey, Mirna, what's going on with this client? Check in with the client. So if you start credit repair, credit's not there, I'm not the agent. I think neither one of us are just like, hey, good luck, we'll call us when your credit's there. I'm intentional about staying in contact because I want you to build your credit and learn about your credit. But yeah, I wish we would have done a deeper dive of how many accounts you've deleted and how much money you've deleted for clients that we've worked with together.
Oh, I have a list. I'll go ahead and do that for you.
Send that to me and we'll post it in the comments.
That's a good one.
Is there anything you'd like to add that you think we did not talk about, or that you would like to share, that you think people could walk away with from today? I even thought about having you on a Monday where we kind of have a casual kind of Monday in mortgages and tips and tricks, like, hey, deep dive into like the credit. If you bring your credit report, can we look at it? How long does it take you to analyze the credit report? Is it pretty fast?
3 minutes.
3 minutes.
I'm pretty quick. So let me see. I love credit. I'm very passionate about credit. So anything that I could do to help people, I want to do that.
Yeah.
Especially, thank you for all the business that you have sent us and supported my baby with. But I would definitely just encourage people to let us look at the report. Some people think that they have nothing or less than their husband, and then we look at their file and they end up having way more than they anticipated. So
Yeah. It's and I think when you get and earn that credit and you've worked hard to repair, like you said, you've repaired yours. Same with me. We've been there where we've maxed out everything and had to rebuild everything. So I think we've been in the lines with a lot of people and we don't talk about it enough. I think people have a lot of shame and embarrassment about credit. And I never want people to feel uncomfortable because we don't know what we don't know. Like we weren't taught credit at all. We were taught that it was not a good thing, or then we don't know how to properly use it. So then we end up in these bad situations. So I don't ever want anybody to ever be embarrassed. There's always a start and there's always a finish line. And so we're here to be the helping hand to help you through that and navigate that. But also just if you never even buy a home, it's super important to just learn how to manage your credit and then hopefully teach that to your kids and it just become an important thing for your entire family and for generations.
yeah.
And so, yeah, I thank you so much for joining us. You'll always see Mirna at our first time home buyer classes because she adds a ton of value. Honestly, I feel like a lot of the first time home buyer classes, people just want to talk credit.
Yeah.
So if there is any questions that we didn't answer, any topics that we didn't cover, as always, drop them in the comments and we will get those questions answered for you. Also, if you are interested in learning more about Mirna and how she can help you with credit and what we need to do to get you, like I said, whether it's to buy a home or just to improve your credit, comment below, shoot me a DM, shoot me a text message, and I will get you all connected. We will also provide Mirna's contact information in the comments. And then as always, if you have any questions about real estate, any topics you want to talk about, any small business owners that want to be on our show, fill out our Google form that will also be in the comments. And before we wrap up, I just want to we won't be here next week. We'll be here on the following. And I think we're going to be talking about new construction and why it's important to have an agent with you by your side. This weekend, our Grand Marshal co-host Brandon Beston will be at the Edgewater Pride. It is Pride Month. It is this Saturday starting at 10:30. So if you're in the Wheat Ridge area, stop by. Brandon will be there. And yeah, it's Pride Month. Let's go. And Father's Day for all the fathers out there. And then I think I'll end it here. Thank you so much for coming, Mirna. I appreciate your time. She didn't realize it was a live show. Nope. Her memes on our text message were like, and I'm like, girl, you're good. You got this. I think you're great in front of the camera. So no worries at all. And then, yeah, my husband used to always have better credit than me. And then I've learned and I'm a little bit above him. How to throw that in there. But yeah, no, it's always a fun competition when spouses are like a credit challenge.
Yeah.
But I hope everybody has a fun, safe weekend. Enjoy all your Pride festivities. Our office is having a movie in the park event this Saturday at Clear Creek Park starting at 5 p.m. So if you know any agents in the office and want to stop by, please do. It's a free event. Thank you so much for tuning in. We hope you found value and we will see you next week.